Ms. Arundhati Bhattacharya has over 40 years of rich experience in India's financial sector, working across varied roles and diverse national and international locations. Having been the first ever woman chairman of State Bank of India, Ms. Bhattacharya stamped her imprint in the financial world, not just in India, but globally as well. Prior to serving as chairman of SBI, she served as MD and CEO of SBI's investment arm, SBI Capital Markets. Earlier, as Deputy Managing Director in SBI, Ms. Bhattacharya headed the largest human resources department of the banking industry, consisting of a workforce of over 2 lakh employees, which includes 65,000 officers. In her extensive service in the bank, she has had the opportunity of working in metro, urban, and rural areas across the length and breadth of the country. She's handled forex, treasury, retail operations, HR, and investment banking portfolios, and large corporate credit. As Chief General Manager, Ms. Bhattacharya was involved in setting up several new companies, initiatives of the bank, including SBI General Insurance, SBI Macquarie Infrastructure Fund, SBI SG Securities Limited, etc., as well as the launch of new IT platforms such as mobile banking and financial planning in the bank. As Chief General Manager of the Bengaluru Circle, she took keen interest in promoting financial inclusion and financing of self-help groups. She also had a stint in the bank's New York office, where she was in charge of monitoring branch performance, overseeing external audit, and correspondent relations. Highlighting some of her achievements, it is under Ms. Arundhati Bhattacharya's leadership that the Global Finance magazine from USA adjudged State Bank of India as Best Bank in India, Best Trade Finance Providers in India, and Best Sub-Custodian. The same magazine has adjudged State Bank of India as Best Bank in India, Asia Pacific. This deserves a big round of applause. That's not all. The Forbes magazine has ranked Ms. Arundhati Bhattacharya 25th in the list of most powerful women in the world and 5th in the most powerful women in finance category in the year 2016. She's also been featured in the Fortune list of top 50 globally most powerful women in business and ranked among the top 5 in the Asia-Pacific region. She has been ranked 26th in the 4th edition of Fortune's World 50 Greatest Leaders list, becoming the only Indian corporate leader to be featured in this list. With these few words, may we all welcome Ms. Arundhati Bhattacharya to address us all this evening on fintech and banking.
Good evening, Mr. Subedar, Sri Nana Patekar-ji, dignitaries on and off the dais. First of all, thank you very much for this very signal honor of inviting me for this program here today. Bombay, or rather Mumbai, has been the financial capital of India for a very long time. And it is the people sitting here today, in the past, and also in the future, who really determine what India will be like going forward in the 21st century. To that end, I think that the topic that we decided I would speak on today, that is fintech and digital banking, could not be more important or could not be more pertinent. I'm just coming from listening to the finance minister's press conference today. It was a very important press conference, and I think for the first time, the Indian government has decided now to put a recapitalization of 2,11,000 crores for the public sector banks. Now, this is really a very big amount, and I think in the history of India, such a recapitalization number has never been committed. So to that extent, we can understand very well that the government is now determined to ensure that the economy that was slowing should pick up speed again. And therefore, in that context, fintech and digital banking become even more important. The expressions fintech and digital banking are closely competing terms, and at times they have direct relation with one another. Though it is not the same, many people are confused as to which denotes what, and often interchangeably use the two terms. Digital banking entails use of digital technology in the delivery of banking services. Thus, things like core banking software, mobile banking, ATM, internet banking, all constitute digital banking. Now, some of these services may also be provided by a fintech. And at that point of time, digital banking and fintech happen to refer to the same activity. The term fintech itself, which is a short form of the phrase financial technology, denotes companies or representatives of companies that combine financial services with modern, innovative technologies. As a rule, new participants in the market offer internet-based and application-oriented products. Fintechs generally aim to attract customers with products and services that are typically user-friendly, efficient, transparent, and automated, even more than those that may be currently available. Traditional banks have also not yet exhausted the possibilities for improvement on these lines. It is not possible to define the term fintech on the basis of its use in legislation or in legal documents. Fintech companies are subject to differing kinds of legal and regulatory obligations due to their differing business models and the extremely diverse products and services that they offer. Thus, it is not possible to construct a restrictive definition of fintech that applies to all of the entities traditionally associated with the term. While most companies in the fintech industry have certain features in common, there are always enough exceptions to render them inadequate for producing a general definition. The Basel Committee of Bank Supervision has, on the other hand, opted to use the Financial Stability Board's working definition for fintech as technologically enabled financial innovation that could result in new business models, applications, processes, or products with an associated material effect on financial markets and institutions and the provision of financial services. To just show you a few of the things that are there in respect of these sectoral innovations, fintech basically are now innovating in a few of these areas. The first of that is the credit deposit and the capital raising services. And here the kind of fintechs that are working are basically to do with crowdfunding. That means where a person comes with a project and then puts it forth on the internet, and people reading or looking at it decide that they would like to fund it. So there is crowdfunding. There are lending marketplaces. Of course, there are mobile banks that are available only on the mobile itself. And there are other applications that will register you, do a credit scoring based on what they can see on your mobile. That means your bank statements, your interactions with people, any kinds of credits that you may be getting. Based on that, they will put a credit score on you and make available to you a line of finance that you can obtain at any point of time. The second area where we are seeing a lot of innovations in fintech is in the payments, clearing, and the settlement services. Here there are two parts, the retail part and the wholesale part. In the retail part, of course, you have things like the mobile wallets, Paytm, amongst which is currently the most well-known. You have peer-to-peer transfers. So whether you need to do transfers between friends, transfers between banks, transfers between businesses, all of that can also be here. And of course, we have the digital currencies. You are aware of the Bitcoin and the cryptocurrencies. Today, there is also a term called ICO. It means the initial coin offering, where actually speaking, instead of an IPO, people are doing an ICO. So I may be a company and I may be wanting my company to be using something like coupons. If you remember in earlier days, we used to have malls where as you walked in, you would have to buy the coupons of the malls with cash and then use those coupons in whatever purchases you make. When you come out again, you would replace them with cash. So something similar, digital currency is something very similar. So digital currency is something that is taking place. Similarly, on the wholesale side, you have the corporates where you have the value transfer networks. There is Forex also, on which a lot of work is being done by the fintech sector, and of course the digital exchange platforms. The third area where fintech has also taken hold is in the area of trading or in the area of treasury management. It is here that you find that a lot of fintechs are now taking part in what is called high frequency trading. So basically this is based on algorithms. So algo trading is as it's called in common language, copy trading, e-trading, and robo-advice. In fact, this robo-advice is something also which has taken root in a number of companies. So instead of having your financial advisor tell you where to put your money and what are the stock tips, you would actually have robo-advisors giving you the same kind of advice. Now, all of this, is supported by certain sectoral innovations. And these sectoral innovations are there right across all of these three verticals that I showed you. And these could be the portal and the data aggregators, the infrastructure, that is, the infrastructure itself that is required in order to support these fintechs. So you have the open source platforms, you have the APIs, the data applications, that means the analytics piece of it, the distributed ledger technology, that is something for basically Bitcoin is based on the distributed ledger technology. And thereafter you have things like security, cloud computing, the Internet of Things, and of course artificial intelligence. So this entire universe, you can switch it back. This entire universe is what actually the fintechs are working in. Now the topology of India's fintech sector is also a little different as compared to the global fintech sector. And here, as you can see, if you look at this slide, it will show you that the Indian sector actually is lower than the global sector in areas like payments and in areas like financing and payment services. Now, one of the reasons why India's fintech sector is different from the global one is because of the lack of financial literacy. More than anything else. It is not for lack of technology. In fact, in many areas, India has fintech that is not available in the rest of the world. One such thing, for instance, is the UPI. The Unified Payment Interface is something which is not available in the rest of the world. Now, what does UPI basically do? What UPI basically does is, if you have the payment app of Bank A, you can connect it to your own account in Bank B. And then you can transfer money to a friend who may be having an app of Bank C, but his app may actually connect to his account in Bank D. So to that extent, this is an app or this is a platform that allows total interoperability across apps, across banks, and again, as I said, it is unique in the world. Now, even though technology actually in India is far ahead of the curve, the actual utilization of fintech in financing and in payment services in India is far less, on account of the fact that financial literacy itself in India is still not at the level where we would like it to be. Now, again, as I said, this is largely due to the underdeveloped nature of the market and scope of technological penetration across the various lines of these verticals are still at a nascent stage. The other thing that we talk about when we talk about fintech is we often term them as challengers or challenger banks. Now, challenger banks actually in the world means those units which are actually banks and not fintechs. However, in the recent past, on account of the fact that this segregation has been getting narrowed, therefore fintechs also are classified as challenger banks. And if you take companies such as Alibaba, etc., which have actually grown their deposits far more in a far shorter time than regular banks, then you can understand how fintechs are also used interchangeably with challenger banks. However, again, in the Indian context, we cannot call them challenger banks because in India, fintechs are not allowed to carry on banking activities until and unless they become banks themselves, either full-scale banks or payment banks. Similarly, also in India, the use of cryptocurrency is at the present moment not allowed. However, there is a growing competition that the banks are facing from a new crop of technology companies who are meticulously chipping away at their business by unbundling many of their bread and butter banking services. Such unbundling of financial services is not going to drive banks out of business. This is a question that is often asked to me, that are y'all scared of fintechs? Do you believe that fintechs are going to drive the banks out of business? Now, for both of these questions, I have only one answer. You know, when I was in Singapore, I think about 2 years back, and I heard the Prime Minister of Singapore speaking, and he was saying that, you know, regarding Singapore, I am paranoid. I am paranoid because I know the moment I stop being paranoid, I will stop feeling challenged. I will start becoming comfortable in my existence, and thereby I will lose my slot in the entire Committee of Nations. I think for the banks also it is the same. It is not a question whether you are scared or afraid or anything. But I think it behooves of the banks to be paranoid of the changes that are coming in, because if they are not, to that extent, they may lose their share in the market or they may lose their position in the business that they are in. So that is one. And the second that is often asked is, are banks going to be simply, you know, written off? Are they dinosaurs that are going to disappear? To that again, I am very, very clear that I do not believe that will happen. Fintechs have their own space and so do banks. So such unbundling of financial services, again, I don't believe is going to drive banks out of business. The reason for that is banks have massive structural investments and positional advantage gained from decades of relationship building with regulatory and lawmaking bodies. We must understand that this is something that is very important. After all, at the end of the day, when you are dealing with money, it is important to understand the regulations and legal provisions are very important in this particular area. And banks have that inherent advantage of having worked both with the legal bodies as well as the regulatory bodies for a very long period of time. Therefore, these assets won't evaporate overnight, even if a bank loses some amount of control over the user interface with customers through such unbundling. However, that such an outcome is a possibility is confirmed by the experience of competition and unbundling in the telecommunication industry in early 2000. This competition, therefore, as I said, should not be taken lightly, and it is right on our part to be aware of it and, if necessary, to be paranoid about it. The holistic view of the two terms, therefore, show that fintech sector and digital banking exist as in a symbiotic coexistence. The fintech industry in India is not so mature as to challenge existing banking setup, given that banks have adapted their strategies to invest in some of these new emerging fintech sector themselves. So what is basically coming as a result of this challenge that is posed by the changes, the evolution in the fintech sector is that banks themselves are now tending towards the fintech sector and beginning to evolve on the same lines themselves. In fact, I was in Spain about 6 months back, and I was talking to the second largest Spanish bank. And the president of that bank very clearly said that in 4 years' time, we are going to be an IT company that also does banking. So that is the trend, and that is where all of it is trending. Now, in India, global financial services have undergone a radical transformation due to technology and innovation in the last few years. The key drivers to this change is financial technology, which is gaining momentum over the years because the services offered appeal to the majority of customers as it delivers with speed, simplicity, and customer autonomy. Now, to give you a small example, when we started the wallet in our bank, our wallet is called Buddy. Now, first and foremost, we started the wallet in response to wallets that had already come into the market. So the startup itself, we were a little delayed. But when we actually went into the market, two things were very visible. One, of course, is that our wallet had a few more steps in order to do the same function that a market-related wallet was doing. Now, when we compared this and when we brought it to the bank, the people who did the innovations, they were of the opinion that in order to be secure, in order for the customer to be secure, it was important to have those additional steps. Now, when we go back to the customer, however, the customer is very clear. If I can get something done in 3 steps, why should I take yours where it is 5 steps? Now, if you try and tell the customer that, look, you will be more secure if you do it in 5 steps. But the customer is not interested. He will merely say, this is a small amount of money. I don't mind if 200 rupees goes here or there, but the 3 steps is important for me. So basically, we as a legacy bank learned a very important lesson, that while it is important to be secure, it is also important to understand what your customer really needs. And there is a very fine line between what is secure and what is easy to do. And you have to tread a very fine line in order to understand what is the right balance. Otherwise, what happens is, for the new sector generation people who are coming in, and these fintechs that are coming in, they will be easily able to disintermediate you, because you are still stuck up on areas of risks and securities, which today's generation may already be beyond it. For them, that does not hold that much of meaning as convenience does. So in the last few years, the Indian economy, which is significantly cash-driven, has really taken advantage of this opportunity. With a range of options, including e-wallets, lending, and insurance, the variety of services provided in this sector are immense and have changed the way consumers carry out their daily transactions. With a population of 1.3 billion, India is a growing market for fintech. A large percentage of unbanked or underbanked population, and the fact that it is a young nation witnessing high growth in digital penetration makes India an exciting global space for fintech. Here again, Nanaji just talked about the villagers and the difficulties that they have. Actually, one of the biggest difficulties that villagers have always had is access to finance and to be able to be included. Many of these suicides that you saw were suicides done by people who did not have access to the regular finance, to banking finance. As a result of that, what happens is, if you go to the informal channels of finance, the kind of interest that you have to pay is humongous. And therefore, if you are not able to service one season, you automatically get into a loop out of which you cannot get out. So one of the things, if you are really going to ensure that these suicides don't happen, would be to ensure that each and every farmer has then access to the formal channels of finance. And again, if you look at the fact that we have 600,000 villages, you will never be able to have 600,000 brick and mortar branches. And therefore, even if you are looking at ensuring that the lot of our farmers increase, the use of these fintechs in regular banking then becomes extremely important, because the only way to deliver these services at the far-flung corners of the country in a manner that makes sense in the question of spends or in the question of costs can only be done if you have a perfect semblance or a perfect usage of fintech within your existing banking channels. So we have found that in the Indian banking and financial industry, that the penetration of startups or fintech in the consumer-facing offerings has gone up by leaps and bounds. One of the initial offerings which came up around 2005 was the banking correspondent model. Again, the one that I talked to you about, which we are using in order to do financial inclusion in the villages. This was used to increase penetration of financial services to the rural household. With agents having basic technology to perform financial transactions, these business correspondents offered a low-cost alternative to setting up branches for financial institutions to serve the rural population. Fino, Paytech, and Eco India were the major startups that took advantage of this opportunity and built their services on the BC model. 2010, however, saw an emergence of payment startups in mobile wallets, e-bill payment, and mobile recharge services, and the major fintech startups such as Oxygen, MobiKwik, Paytm, and Freecharge originated between 2005 and 10. From 2010, there have been multiple fintech startups that have mushroomed in different segments, such as lending. So there are 100+ startups in the lending space at all that I showed you. In the personal financial management space, there are 40+ startups. And investment management space, there is 90+ startups. A lot of people have also asked time and again that how did demonetization help the country? And was it something that caused a lot of disruption but didn't help at all? And we have been saying time and again that one of the major advantages or one of the major gains out of demonetization has been the increase of digital penetration. And if you have a look at few of these charts as to how it has increased. So you have over here the number as on December 16. So that is the number, around 1500 billion rupees was the value of the transactions in December 16. But if you go over now, you will find that in May of this year, the value of transactions had gone up to as much as 2,133 crores. Sorry, 2,133 billion rupees. So you know the immense increase in the mobile banking transactions from April 16 to now, it is almost 300% more on a monthly basis. And that is something that is a real benefit that has occurred. Similarly also, if you look at the debit cards and the credit card spends, yes, it did peak in December 16 at the height of the demonetization. It has come down since then. But if you compare it with April 16, this is far superior what we have today than we ever had in the past. Similarly, with things like PPIs, PPIs are the prepaid instruments, the use of prepaid cards. For instance, today, when my driver or when my caretaker goes to shop, I give her a prepaid card. It's the easiest thing. You load it with 5,000 rupees and you leave it with them, and they do their shopping as they wish. They tell you as soon as the balance comes down and you load it again, and it's a very safe way. There is no way that anything can get lost. And they also have become quite capable of using this. The one thing that we have seen is that even though we are saying financial literacy is low, the penetration of these products now in the rural areas is increasing by the day. And therefore, even though many of these products have come down from the peak of December 16, they have settled at a substantially higher level than where it was when we started the demonetization. Therefore, these fintech firms that are good at innovation and have the skills and mindset to leverage big data and to be accommodative to market changes will indeed carry forward this digitalization process that we have already seen started. And many of these new fintech entrants, they are in direct competition with banks as well. As I said, in areas like wallets and things like that, these fintechs are indeed in direct competition with banks, and they are targeting areas which are new and emerging, such as the P2P lending, artificial intelligence, machine learning, robotics, etc. In the last few years, fintech companies are disrupting the traditional financial services business and emerging as a challenge to the banking system. So, to counter this, banks also need to assess the likely impact of disruption and reorient their business models. They need to improve their customer relationships by changing their internal processes, mindset, and internal structures. I think, as I said earlier, banks are already reorienting themselves towards ensuring that they include the fintechs and their offerings in the offerings that the banks are giving. However, I think the basic thing that I would like to highlight over here is a reorienting of the mindset. The mindset reorienting is something that I think banks world over need to do, because the agility of the fintech is not something that you see in a bank. A bank traditionally has been more process-driven, more regulated. It's an entity that has a very high level of regulation, and therefore, their levels of documentation, their levels of processes are very, 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 very long and very, very detailed. Now, if you are really going to adopt the mindset of the fintechs today, I think that is where there is the largest chasm or the largest gap, and that is where we need to reorient ourselves more. For banks, fintech partnerships offer a fast and iterative approach to innovation without the need for massive capital expenditures, and they can also help to promote a higher standard of trust with customers. What the fintech lacks, on the other hand, I talked about what the bank lacks. What does the fintech lack? The fintech actually lacks the trust of the customer. They are here today, they may be gone tomorrow. When you are talking money, small amounts of money people will trust. But when you are talking serious money, nobody is going to trust it until and unless they're sure that this particular organization is going to be there 10 years hence or 15 years hence or 20 years hence. And that is where banks actually have the upper hand because they have the trust of the customers. Therefore, it will be good for both banks and fintech startups to collaborate with each other as both have comparative advantage in certain areas. Fintech companies are having capacities to address specific areas of financial customers such as remittance, credits and savings. Despite some inherent advantages that the fintech players enjoy, they don't have a big client base of their own. They lack the expertise and investment required to navigate regulations and licensing discipline of the regulator. And last but not least, they don't have the history and the track record to automatically get the trust of the customers. The major strength of traditional banks is that it possesses a reputation for trustworthiness, and they also have the benefit of experience and tried and trusted infrastructure, alongside of specific financial knowledge of risk management, local regulations and compliance. On-the-ground market and customer knowledge and pre-existing client base of banks can be of immense value to fintech projects. In a nutshell, therefore, banks and fintech firms have different comparative advantages, and a strategic collaborative partnership between the two would liberate them to focus on their respective core competencies and contribute to the innovation process. However, a small point of caution. There is increased levels of hacking threats and distributed denial of service attacks, which have the potential of causing significant disruptions in the services of fintech ventures, apart from risks related to sensitive customer information being leaked out, as well as cyber frauds. Therefore, the onerous task of efficient monitoring and management of the attendant information technology systems and data security risks are therefore important for enhancing the net benefits of disruptive innovations. In conclusion, I would only like to say that any technological advance can be dangerous. Fire, when it was discovered, was dangerous and continues to remain so. Even speech was dangerous and still is quite dangerous if used in the wrong manner. However, humans would not have been humans without these. And so also, in respect of fintech, if we are looking at doing the right thing, if we are looking at financial inclusion, if we are looking at making the lots of all of our people better, if we are going to ensure that the lives of our people become easier and simpler, and that financial transactions become such that every single person can be a part of the same system, then fintechs definitely is the way to go. However, the banks themselves have a lot of comparative advantages. They need to collaborate more with this particular sector in order to bring the best of both worlds to the customers. Thank you.
Thank you very much, ma'am. Fintech is the way to go, and you very well started by shedding light on fintech, technological-enabled financial innovations, moving on to sectoral innovations in retail, wholesale, fundraising services and investment management services. You also highlighted that there's lack of financial literacy, the reason behind why India's fintech sector share is low, and it's not lack of innovation. and the need for banks for reorienting their mindsets and banking and fintechs to go with strategic collaborations. Ma'am, like our president mentioned, we have recently started a fintech forum, and the agenda of this forum is to provide a regulatory sandbox environment, beta testing network, and collaborative frameworks. We'll now like to felicitate ma'am with a memento as a token of our appreciation. I'll request our Senior Vice President, Mr. Sunil Mathur, to present the same.